Okay, so today we're looking at a bull case for Strategy Inc., or MSTR.
Right, arguing it's a strong buy based on its leveraged Bitcoin treasury.
Exactly. It points to the analyst consensus and the fact that the stock is trading near its 52-week low.
Got it. A really interesting piece. So let's jump right in on how we can make this argument even more robust for a really knowledgeable investor.
The argument starts out, really strong. It focuses on the quantitative consensus.
The numbers.
Yeah, this unified strong buy rating, an average of 1.33, and this massive 171% potential gain to the average price target of, $541?
And that's effective. It definitely gets your attention. But, and this is the first big thing, the thesis needs to be strengthened beyond just that quantitative consensus.
You mean digging into why that consensus even exists?
Precisely. The weakness here is that the whole case rests so heavily on the outcome, that impressive target price, without really addressing the qualitative assumptions that are, driving it.
Like the Bitcoin price they're all baking into their models.
Exactly that. And if that general BTC model shifts, the entire bull case becomes, vulnerable.
So it's a bit of a house of cards?
It could be. So our suggestion is to integrate some of that necessary context, maybe a sensitivity analysis to, stress test those assumptions.
To show that you've considered the whole analytical process, not just the glossy result.
You got it. For a concrete example, you could include a brief section discussing the implied Bitcoin price required to justify that high-end 705 target.
Okay.
Or maybe outline how that high 3.37 beta actually translates those assumed price movements into equity returns. Just something to connect the dots.
That makes a lot of sense. And speaking of heavy lifting, the author then pivots right to the core financial structure.
The leverage part.
Right. The $8.22 billion in total debt and that high beta. They do also note that the other business provides a foundation.
Yeah, with that nearly $475 million in revenue and $333 million in gross profit.
Mm-hmm.
And this is where we see the second huge opportunity. The next step is to proactively use that operational cash flow to mitigate the leverage risk.
So not just stating them as two separate facts.
Not at all. I mean, the weakness right now is that the leverage is presented purely as an amplifier of gains. It mentions the legacy software businesses there bringing in profit, but it doesn't explicitly connect those two things.
It leaves a bit of a gap in the risk mitigation story.
A big one. So the suggestion is to turn that acknowledged risk into a competitive advantage. Explicitly detail how the software business's cash flow provides a unique structural buffer that, pure crypto trusts or ETFs just don't have.
So how would you show that?
Show us the math. Directly compare that TTM gross profit of $333 million against its debt servicing requirements.
Ah, okay.
Yeah. Illustrate exactly how the operating arm supports the treasury strategy. That one move shifts the entire narrative from, say, a leveraged gamble to more of a structurally secured strategy.
So to recap, we focused on two core opportunities to really polish this bull case. First, move beyond just the quantitative consensus by integrating the underlying Bitcoin price assumptions that are actually driving those high targets.
And second, strengthen the narrative around the debt by actively connecting that $333 million in gross profit from the software business directly to mitigating the risk of that $8.22 billion of debt.
Implementing these suggestions will, I think, elevate this analysis from strong to exceptionally robust for any sophisticated investor.
I completely agree. We'd invite you to refine the document and, of course, send it back for another critique.